thoughts and opinions expressed are the speaker's own and do not represent the views, thoughts, and opinions of Phi Labs or the Archway Protocol. The material and information presented here is for general information purposes only.
Welcome back to the Arch-In podcast. I'm your host, Eric Weissman, joined today with co-host Valeria Salazar.
Hi, everyone. Glad to be here.
So in episode 1 with Griffin Anderson, we discussed that the Arch-In podcast aims to not only bring internal and external interviews, but also news updates and tutorials. And part of these news updates will be weekly Wednesday updates for news inside and beyond the Cosmos ecosystem. And today we're going to start with governance proposals coming onto the Cosmos Hub.
First up, we've got Proposal 88, which comes after the Atom 2.0 proposal failed a couple of weeks ago. So this proposal raises the community pool tax from 2% to 10% in order to increase the inflows to the community pool and help with future funding to bring utility to the Cosmos Hub.
Yeah, and a lot of the pushback from Atom 2.0 was this idea that the core contributors were wanting to print up to 20% of the Atom supply in order to fund these treasuries. And their feedback was, why should we have you guys do it and you guys print this money behind closed doors instead of just have it use the community tax that's already in place? We can raise that and then have these spend proposals and these fundraising go directly to DAO governance. So a lot of the vision of Atom 2.0 was supported, but they wanted it more piece by piece. And I think this aims to really start that vision in a more decentralized manner. So interesting to see how Prop 88 goes. I do expect it to pass, even though it would be the stakers voting to lower their immediate rewards. It would be, in theory, for the long-term success of the Cosmos Hub and ecosystem. And with a current supply of 286 million Atom, in a high inflation rate of the Cosmos ecosystem as a whole, raising this from 2 to 10% will be very significant.
Moving on into Proposal 89, Cosmic Validator has requested to receive community funds for the videos that they make.
So Cosmic Validator currently has a bit over 400 subscribers, but does have a very informative YouTube channel. So do check it out. This is getting a lot of anger and a lot of people with upset responses currently, as there are far more content creators focus on the Cosmos ecosystem with many more subscribers who may or may not be being monetized or taking backroom deals currently. Like, we honestly don't know. However, this isn't completely unprecedented. Back before the Terra Luna collapse, Terabytes, now Bytes Digital Group, had received 400,000 UST to continue specifically Terra content with their Terabytes podcast, as well as to set up an educational ecosystem, kind of like what Archway is doing with Area 52, but to bring in new developers to contribute to the Terra ecosystem. So one of the heavy pushbacks whenever content creators go to a community pool to get monetized is that they should find monetization elsewhere. They should grow their audience, focus on their content, and it will happen. And while that is the case and content creators can do that, the way that ends up looking is content creators will take backroom deals in order to push specific content, specific NFT projects or something, or focus their audience and their content on things beyond the current ecosystem. So it's usually more aligned to be a payment to keep me focused on the content that I'm making, which is the content you guys want. It's more of you guys aren't an audience large enough for me to grow external monetization. And both are fair points, both are fair arguments, and I'm interested to see what the community is going to decide with Prop 89.
Yeah, absolutely. And so now moving into the Cosmos ecosystem, Informal Systems is building a new chain for liquidity saving as part of their collaborative finance initiative, in which competition and collaboration go hand in hand. So they are describing liquidity saving through two mechanisms: obligation clearing and mutual credit. So obligation clearing actually has been happening in Slovenia for the past 30 years, and it's multilateral trade credit set-off, allowing businesses to save liquidity by finding closed loops and allowing them to clear invoices against one another. Mutual credit, which happens in Switzerland currently, allows people and businesses to take out loans against future earnings.
So Informal Systems, again, is led by CEO Ethan Buchman, one of the core contributors and founders to the Cosmos Hub and ecosystem as a whole. So very interested always in whatever they're doing. But this idea of liquidity saving is really fascinating. As somebody who's contributing heavily to an AMM, I've seen a lot of these scenarios play out where there's almost like a Mexican standoff, two parties holding the gun where they have each other's tokens, or they're automated buybacks in both directions. And this idea of liquidity saving would instead kind of counter those co-debts behind scenes, instead of rewarding the liquidity providers or the DEX for trading back and forth and affecting the price more than it otherwise would have. So this does seem like an efficiency to bring to the market, and I'm excited to see how it's handled, as well as mutual credit potentially being something that is more efficient maybe than the current DeFi lending protocols that are building out. So I will definitely keep my eye on this. Thank you, Valeria.
Of course. Up next, we have Osmosis's upgrade from December 8th, which passed last week, and it brought a host of different features. Eric, would you like to go through them?
So one of them is the new stable swaps, where instead of just using the base concept product market of X times Y equals K, they will now be using more of a curve model where the slippage and trade fees are a lot lower. So this will be a huge upgrade for the Cosmos ecosystem if you want to switch between things like USDC and more of our native Cosmos stablecoins like IST and USK. Another very exciting upgrade is the multi-hop fee reduction. Whereas since Osmo is the base pair for pretty much all of their liquidity pools, if you want to trade something like Juno to Atom and it routes through Osmo, you'll experience the 0.2% trade fee on both sides of that, making your actual trade fee more like 0.4%. And now with a multi-hop through Osmo, they're going to cut those fees in half in a two-hop system, lowering it to 0.1% on each side and a total net fee of 0.2%. This makes it a lot easier for the user while lowering the rewards a little bit for the liquidity providers.
And so if you've been on crypto Twitter at all within the last week or so, you've seen and heard about the Kujira saga. So essentially, Kujira released their USK papers, which proposes a Kujira stablecoin that is soft pegged to the US dollar and backed by a basket of Cosmos assets. So Jacob Gadikian, a well-known developer within the Cosmos and the founder of Notional DAO, called them out, saying that apparently USK and a USK admin can mint it arbitrarily. And it led to a couple of self-proclaimed Kujira community members stalking Jacob and threatening him online and posting quite the terrible messages. So Kujira publicly reprimanded this behavior, as well as a Kujira contributor, and they issued an apology. And now Cosmos Club will be hosting a Senate for Kujira. It'll be a series of events where community members can come in, ask questions, and the Kujira team will be addressing all their concerns around their new stablecoin and beyond.
Yeah, I've had the privilege of talking to some of the core members at Kujira, as well as Jacob Gadikian, who is an absolutely brilliant developer and contributor to the Cosmos ecosystem. And this kind of behavior of stalking and threats, well, it's a decentralized ecosystem, is never okay and should never be condoned. What Gadikian has brought up here is some very serious, good discussions to take place, especially between closed source and open source. Gadikian arguing that all code should be open source, following the precedent set by Satoshi Nakamoto with Bitcoin, and Kujira arguing instead that in order to capitalize on what they're building, they need to remain closed source so that other people can't steal their code before they're able to get that market share. And I definitely understand both perspectives here, and it is risky when it comes to a stablecoin. So a little bit about the stablecoin mint mechanisms. While USK has closed source, Jacob Gadikian has claimed that he was able to clone their code, basically scrape it and make a working version where he was able to make himself an admin and just print all of the testnet USK he could with that same contract. And he argued that if he could do it, then that means that they have that same permission. And Kujira is responding and saying that, yes, there has to be these authenticated accounts, but the plan was, and they now have migrated this so that only other contracts that are whitelist approved are able to call on that mint function, so that that does genuinely have to be over collateralized. We will see if and when they do choose to open source the code, as they have willfully said that they plan to. But in the meantime, we'll keep you guys posted here.
Absolutely. Thank you, Eric. Up next, Luna Classic is back on Osmosis. So the IBC channel between Osmosis and Luna Classic is back online as of Monday, and users can transfer Luna Classic and USTC between chains on the frontier.
Congratulations for everybody who was hurt by Luna. That is coming back, especially the Kujira team, who now has their own layer 1 chain. I know we were all hurt and devastated by what went down. Just do keep in mind that while it may be a nice time to blame SBF for what went down with Terra Luna, that realistically it was like it wasn't that the model was going to work if it wasn't him that attacked it. At the end of the day, they were a Fed competitor that were printing dollars, and that is something that's scary. We do need to focus on collateralization, and I had a Twitter thread that came out pretty recently. The over-collateralization of stablecoins is not based on the market cap of the collateral, but rather based on the liquidity at which it can access. So keep that in mind. We need to build DeFi sustainably, all of us.
And so moving on to liquid staking. So Quicksilver is finally expected to launch on December 16th, and Stride will be listing ST Evmos within the next 4 weeks. So it looks like liquid staking is heating up in the Cosmos.
Very interesting. We're going to see how many people adopt these different versions as more and more liquid staking protocols come out. But congratulations to the Quicksilver. I know it's been a long time coming.
Yep. And then from there, Flipside has added Cosmos data onto that. And a lot of people have been checking out the Atom holders voting patterns based on Prop 82, which was the Atom 2.0 proposal. So it seems that based on validator voting, some users decided to vote against or change their votes. And it's been interesting to track this data, and we look forward to taking a look at how that's going to evolve. On another note, CosmWasm has released a series of dev notes. The first one came out a couple of days ago, and it's meant to teach people CosmWasm, make it a little bit more accessible for developers to learn and maneuver the platform. An ICS proposal might be coming soon, according to Johnny Cosmos Twitter. And finally, Q1 2023, we can expect IBC Go version 7.0, which incorporates a client refactor work, which aims to make light client development easier. Essentially, what this means is that it'll allow IBC to support chains that are not Tendermint based. IBC currently only supports chains that are Tendermint, Solo Machine, or localhost based. So really exciting stuff to bring IBC to beyond the Cosmos.
I know a lot of other Web3 chains that are really interested in adding IBC. So this will be huge for the Cosmos, really, instead of just focusing on getting other people to build on us, really doing that, reaching out, that crypto evangelism, if you will, to be the force that interoperates the rest of Web3. So props to you guys.
Absolutely. And now, speaking of beyond the Cosmos, let's take a look at what's going on in Web3. So, continuing on the FTX saga, Sam was arrested. So anyone who was affected by the FTX scandal, hopefully, that makes you feel a little bit better. But another thing that happened this week was that The Block, another one of SBF's play toys, was severely affected by the FTX fallout because SBF secretly loaned CEO Mike McCaffrey money, around $43 million, to run it for the last year. So Mike has now stepped down from the board and as CEO, and Bobby Moran has stepped in as the new CEO of The Block.
While Elon Musk owns Twitter and Jeff Bezos owns Washington Post, why not have SBF, in theory, pretty much own The Block as well and make sure they get a whole bunch of puff pieces on FTX and what they're doing? Keep in mind that, as most of you guys are aware, but a lot of the media is missing out on, FTX was not a Ponzi. This was literal robbery of billions of dollars. It was known that none of this ignorance is bliss makes sense. Like, they stole billions of dollars of user funds. I'm very sorry to anybody and everybody who was affected by this. It is good to get them out of this ecosystem so that crypto can hopefully recover and move forward. Not your keys, not your coins. We need decentralized solutions for everything that they were offering.
Absolutely. I couldn't agree more. Up next, Grayscale is trading at a 50% discount right now, which sounds like it's too good to be true because it is. So Grayscale currently is being a little difficult, and it doesn't want to release GBTC's proof of reserves. Its sister company, Genesis, has halted withdrawals since FTX because Gemini was lending to Genesis, which was lending to FTX. And so when FTX blew up, Genesis became somewhat insolvent. And now DCG, its parent company, is in around $2 billion worth of debt. So all of this, plus the fact that you can't redeem any of your GBTC at the moment, makes for a questionable discount.
So a little bit about what GBTC is it is an ETF, which is an exchange traded fund. Basically, these are traditional finance traded trusts or baskets of assets meant to represent a specific sector, or in this case, specifically just Bitcoin. And so in theory, it would be this trust owns so many Bitcoin and has so many shares that are equal ownership of that amount of Bitcoin, and they should trade relatively similarly. A lot of the previous anger that has gone into this ETF is that there's been such a premium on Bitcoin where it would trade up to 20% higher than the actual spot price of the underlying Bitcoin because it was federally compliant. Well, now it's trading at 50% underneath the alleged balance, which is 643,000 Bitcoin, or over $11 billion. And with 692 million shares, that means it should be trading over $16, and instead it's trading at $8.10, which in theory is a fantastic arbitrage opportunity if that Bitcoin is actually there and actually in that trust. What we're worried about is that potentially that Bitcoin that was in that trust, in that treasury, in order to grow it and to justify the 2% fees in order to be a shareholder of GBTC, they've been lending it out to parties like FTX, like Gemini, that may have been hurt by the FTX collapse. Potentially it wasn't secured loans. And now that we cannot cash out these shares for spot Bitcoin directly, why should we trust that it's there? So we're really waiting to find out Grayscale's actual reserves, how much was really there, and see if these lawsuits really do get into the traditional finance sector instead of just remaining in Bitcoin. It's very similar to the idea of, was Terra actually over collateralized by Luna, or was it collateralized by the liquidity posted against Luna? So if they do have to liquidate significant amounts in order to cover this $2 billion worth of debt, we could see a flash crash price in Bitcoin as a whole.
Yep, absolutely. And all of this has led to a representative in the United States Congress calling out onto the SEC to investigate SEC Chairman Gary Gensler. Essentially, his question is, how did everything that happened with FTX go on unknown right under the SEC's nose? So we'll see. I think the lesson here is trust smart contracts, not smart people.
Well, Valeria, thank you so much for the news. And audience, we will be bringing this to you every Wednesday, so set it in your calendar. Keep all of your news inside and outside the cosmos here in one spot. You can access it from your car on iTunes or Apple Podcasts, Google Podcasts, or always check us out on YouTube, like and subscribe.
Thank you, Eric, and thank you everybody for tuning in. See you next Wednesday.